Welcome to another episode of Tech Society TV. Today we have with us Greg Riebe, Company Director, Tech Entrepreneur, Mentor and Angel Investor. Hi Greg, thanks for coming.
Thank you.
A lot of people know of you as a mentor in startups and tech startups specifically. But I think a lot of people aren't quite sure of, or I think a lot of people aren't aware of your history. So can you give us like a quick potted history of Greg Riebe?
Yeah, sure. Actually, I started off as a software engineer. I'm a geek. I have a propeller head.
That's cool.
One too many decades ago. But I actually learned a lot about technology. Got really quite deep into software. From a very technical system side of things. That actually allowed me to get into management, and then I moved into some software systems providers. From that, actually, I got engaged in the consulting. So I used to work for Arthur Young before it became Ernst & Young. I always say I came from the Young side. But that actually got me into sort of like strategy and consulting and advisory type work. From that, I actually then was actually headhunted and then went into SGI Insurance and headed up this sort of technology and innovation group. So what that actually took me from was technology side of things, from the strategy side of things, and big corporates, and very much we were commercialising a government trading entity into a private company, a listed company. Around about 2000, though, I left them and actually was fortunate enough to be involved on the board of a small not-for-profit multimedia company. But part of our commercialisation of that was actually syndicating with other people, and we were successful in actually securing a contract from the federal government to set up one of the 10 incubators around the country. So literally, we set up the first tech incubator here in Perth. And so this took me from technology into strategy into sort of corporate commercialisation, but now actually into investment and sort of commercialising startups. And so over about 8 years, we probably looked at about 500 different companies, only invested in 30. But with that, we sort of were able to attract around about $15 million out of the federal government, invested directly 10, invested sort of indirectly another couple, the rest was sort of running the business. But we sort of realised that actually there was just limited amount of money to actually enable a startup to really get off the ground. So we sort of tuned the way we were doing things. And so we ended up actually helping these startups become investment ready. And from that, we actually attracted probably another $30 million worth of private funding, another $4 or $5 million worth of government subsidies. So it was about $50 million over about 8 years. When that sort of finished and fully invested, and some of those businesses did die, unfortunately. Some that we were successful in selling them, but a number of them are still operating successfully today. But we realised there was a real gap in the marketplace in terms of early stage funding. And so I was fortunate enough with a couple of other gentlemen, Jim Tweddle and Ray Hart, and we actually co-founded the Perth Angels. Yes. And so that's where I sort of started that angel investing side of things with Ray and Jim. But during that time, sort of realised that was one thing giving money. The other thing is that what we really need to do is to help build capability. And so that's where I got involved in mentoring. Yeah. And so I've worked with a lot of the different programs around Perth, and I've really enjoyed that. And so whether that's at the research level or at the startup level, and now sort of working more at the mid-tier level.
Would you say that's what do you say to those people who say that there's no money in Perth for tech startups? It's a common thing we hear. People saying, like Canva went over east because they couldn't find a small amount of money.
About the brain drain and just people leaving.
Yeah.
And I think that's a really interesting area. First of all, I think actually the argument there's no money in Perth, that's not right. There's actually lots of money in Perth.
Yes.
The people that have the money, though, are well and truly educated, and that's been a traditional thing in WA, where they've actually invested in listed or property stocks.
Yeah.
So when we say there's not a lot of money around, really what we're saying is there's not a lot of people that are educated in investing in private early stage technology businesses. And so that's one aspect of it. And so what we need to do from an entrepreneurial side, from the venture side, is that we need to actually help take a lot of the risk out and make sure that we're communicating a value proposition that is actually attractive to those people. From a Perth Angels, actually one of the reasons that Perth Angels runs its angel investing series is that actually a lot of investors don't invest in what they don't understand. And so what we're trying to do is help the private investment community understand new and emerging technology and how you can actually invest in it and take risk out and do it in a managed, risk mitigated way. But we're also trying to help, and I think there's a lot of entrepreneurial programs around Perth now where they're actually starting to help the entrepreneur actually prepare themselves to be investment ready.
Yeah.
So what we need to do here in WA is actually lift the investment side of the coin to understand the opportunities that exist with entrepreneurial ventures, but actually lift the entrepreneurial side of the coin to let them prepare themselves to be investment ready. If you do that, there's actually quite a lot of money around town.
Yes.
You've mentioned investment ready a few times now. What does that involve? Big question, but it's a big topic, and a lot of people want to be investment ready, but they don't actually know what it means.
It probably comes back to me. Actually, a little mantra that I have is always think like the buyer, not the seller.
So know your audience.
Know your audience.
Yeah.
And so we're all very good at actually going out and we're always getting better at it. But in terms of trying to understand who our customer is to sell our offering, our product, our service. And so we've really got to understand what the customer wants because we're selling something to them. They're not going to buy it unless we've got a value proposition. When you're raising money and capital into your business, actually you're selling part of your business. So we need to understand who's buying that. And you need to create you need to create a value proposition that the investor actually understands. And so when it's being investment ready, it means that you've actually positioned your business, you've crafted the value proposition, the features, the benefits, in a way that the investor can actually understand and actually wants to buy.
Do you have any good examples of a company you've given that advice to and probably given them more detailed advice where they actually took your advice and kind of was able to package the...
Yeah, in fact, actually, probably two real case in points at this stage. One is I guess call it a med tech, digital health type solution. They actually did really well in terms of they've been on a number of these entrepreneurial programs around.
Yeah.
They'd actually spent a long time actually making sure that they really articulated what their value proposition was. They really did a lot of work to take a lot of that early stage risk out so that the investor's not buying the risk. Some of that's already been taken out. And so they were very clever in terms of how they communicated their value proposition, and they've secured a nice round of that. Another one I'm just working with at the moment is very much in sort of mining technologies. And so we spent a good amount of time actually really understanding what was the essence of what they were doing. By the way, they're already in the market. They've got a lot of their product out there. They're already selling. They've got good, they've already got good traction. But what was the essence of it? How they were positioned in the marketplace? How were they valued? What was the tools that they used to communicate their value proposition? A good pitch deck, a good one pager. Did they actually have a lot of the agreements that the investors could participate with? Did they actually have shareholder agreements already sorted out? Did they actually get some of the subscription deeds sorted out? Their intellectual property already properly assigned? Did they actually have a good due diligence data room already set up? And so when you're trying to go out and raise capital, you not only need to communicate a very solid value proposition that actually does resonate with the prospective investor, but it's like anything when you go out and sell. If you want to sell, you want to close. And so that means you've got something to offer straight away. You don't want to actually go and try and raise capital and then all of a sudden the investor says, but show me your IP agreement. And you go, oh, I'll just get that. I really would like to engage with you, but what's your shareholders agreement? I'll just go build that.
Yeah.
And so investment ready is all about being clear about your value proposition from an investment perspective. that you've actually managed to take and clear about what risk has been taken out and what's left to be taken out. That you've got the collateral ready to actually engage with the investor. They know what you're going to apply it to. They actually know generally how they're going to actually get a return, when, how do you harvest that investment. And so all of these things lead to being investment ready. So it's just getting yourself ready to actually go out and engage with investors.
What's the top 3 mistakes you've seen early stage startups make when they're going down that seeking funding route?
I think probably the first one is not being clear about how they're actually going to execute to a position that's where they've created and captured real value, to the extent that actually they know that should be able to harvest that through either an exit, some sort of cashing in or something. And so that leads to one thing that I find that a lot of investors look at. It's people and execution. Good people execute well. Good execution generally means they're good people.
Yeah.
So I think getting that execution path right. I find the other one, and probably the dominant one really, is that I find a lot of people talk about great ideas, but they don't tell me what the problem is they're solving. And so when I do a lot of mentoring nowadays, I don't want to hear your idea until you've told me the problem you're solving. Unless you've got a really sort of a really big problem, a deep problem that someone's prepared to pay something to solve, you've probably just got a good idea.
Yeah.
So thinking very much in terms of that. And probably the other one that we do see, and it's getting better, but still needs to be worked on, is your valuation, right? If you want to engage an investor, you've got to have a valuation that actually is commensurate with the risk that you've taken out and the value you're about to create, and also is relevant to what you think you can build to harvest it at the end. There's an uplift.
So that's a really difficult one we've found with startups. In our software business, we have startups come to us and offer equity in exchange for cheaper development, maybe even massive cuts to the cost of their development. And they don't want to give up much of their baby, and they have no experience with that, with the idea of the slice of the cake and the size of the cake. You must see that quite a lot.
And it is a very hard one.
Yeah.
And I can understand why people want to protect as much of their baby and hold on to it. I think it's probably one premise that I would say is that you've actually got to share to multiply.
Yeah.
And so you've got to bring other people in. And I don't just mean that in terms of capital, I mean that in terms of capability. Probably another one of my mantras is that the definition of a real entrepreneur is someone that is not necessarily the innovator or the inventor, but someone who builds capability for execution. That's a real entrepreneur. So how do you actually address the valuation? Is your question?
Yeah, well, I guess it's a bigger question than that, because we also have experienced mentors giving bad advice as well, saying that you shouldn't give away more than this percentage, and very kind of it's been detrimental to the entrepreneur. But it's hard to tell someone, how have you gone about telling someone that you need to look at it this way?
Yeah.
And what does that entail?
It's probably two parts to that. One is, how do we actually create or work out what your pre-money valuation is today?
Yeah.
Right. Where that's at. And the second one is that you do get situations where the investor and the entrepreneur can't necessarily agree, and it's just because they've got different perspectives. They both sit down and say, actually, what you've got is a good idea that solves a real problem, and therefore I can see that value can be created. But I've probably got a view that you probably haven't gone as far, and therefore your value is a little bit less than you as the entrepreneur always think you've got the best things in sliced bread, therefore you think it's a lot higher. And so there are some techniques of how you can mitigate some of those problems. So the first one is, how do we actually come up with a value at the moment? And I think it's a combination of, and probably dominantly, getting an idea of working backwards. So if I do have a good execution plan, to a strategic, excellent position where I can harvest it, what might be the value that I can actually get at that point in time. And so what I might do then is just go away and get a few comparables. What other software companies that have been trade saled, similar to what I'm doing, and what were the prices that they got bought at? Not just in Silicon Valley, but maybe in Australia as well, because we've got different markets. If my business is actually an IPO-able prospect, what were some of the models of how it's going to be IPO'd? And so you're now starting to get a future valuation based upon what the market might offer and accept at that point in time. Now you can actually start working backwards, because in what investors want at the early stage is an appropriate amount of uplift for their risk. And so what you might find at the venture capital level is that they might want 4 to 5 times. I'll say 10 times, but they'll probably go 4 or 5 times. If you come back to the angel level, they want 10 times. If you come a little bit earlier, and maybe founders, they want 20 or 100 times. But I'm saying as you take out risk, there sort of tends to be a lesser uplift.
Yes.
Right. And so, but the earlier you come in, the higher the uplift, because there's the higher level of risk. So a valuation technique is, let's start to get a view as to what the end result's going to be, work backwards. But then start to triangulate that with what you've done. So a client I was just working with recently, we actually sat down and said, well, how much money you put in, but in terms of both time and actual money. So we've got like a replacement cost. Let's actually start triangulating that against what your future financial projections are in terms of net present value or, discounted cash flows, those sorts of things. What is, and also triangulating that against, particularly at the exit, what's actually the valuation methodology then? Because the valuation methodology then might not be the same as today. So what we do is actually just take a few of these different valuation methodologies and we triangulate. And then all of a sudden you start to say, well, actually, with where I'm at the moment, I haven't taken this amount of risk. I actually haven't put a lot of time in. So it's because it's still at the idea, it's just at the idea level. So quite frankly, it's not worth a lot.
Yeah.
It's a lot of risk, very little value. But if I started to spend some money and I put in not even just your sweat, your time, now I'm starting to understand how much I put in and what might cost to replace. Well, actually, now I'm starting to get a little bit of value, right? And then I can start to look at what my future cash flows are. I've actually taken this levels of risk out. So this is the risk I got taken out. This is the risk I've got left. This is what I need to actually go into it. If I do that, that's what the uplift that's the prize I can get at the end. And then I can just reverse back and go, okay, actually $1.5 million pre-money is probably a reasonable deal. Yeah. And investors will work with that. And you might work with that as well. If there is actually still a discretion between, or a difference between them, a delta between two things, well, maybe you then can start to think about using investment agreements like safe notes, where you can sit there and say, well, I think it's worth $2 million. You think it's worth $1 million. So maybe what we do is we'll just start putting the money in, and when I need the next round of money, will then be developed far enough that can actually justify, with some traction, what the value should be then. And therefore, my value will be linked to that. So it's a way of you mitigating the challenge in terms of valuation. So how do you value and how do you set an agreement to actually get over problems?
And now, a word from our sponsors.
Vision is our art form. Emotions are the narrative. And we believe boundaries are just stepping stones. Film my video, telling your story.
You mentioned people trying to get funding when all they've got is an idea. Do you see much of that? And do they ever get funding?
Well, it comes down to who actually funds it. And that sort of ideation stage, it tends to be the class that we call family, friends and fools.
Yes.
And founders. Yeah. And it does tend to be a lot of sweat. Yeah. It's difficult to get funding at that stage. And particularly, That's not to say that you can't, because the idea that has set against a very deep problem, and that it seems to be rational that if we can do something about that, it's worth it. But that means that you've had to do a lot of work to determine that actually that idea, that technology is worthy of pursuit. If I can communicate the reason that it's worthy of pursuit, maybe. But that's very early risk, right?
Yes.
So generally that type of level is going to be family, friends and fools. People that actually believe in you.
Yeah.
Not necessarily have any idea about the technology or whatever. They just believe in you, and I think that's fantastic.
Yeah.
But if you're in research institutes like universities, research centres, they get money through that for that sort of stuff, because that's applied research. You're not necessarily going to get it from angel level investors or venture funders or private equity or stock exchange, because it's just still too far away from the risk that it has and the risk being taken out.
Great.
You mentioned a few times that in WA we have the investors have a big focus on mining property, the kind of conservative approach. But are there other assets in the WA economy that's less well known?
In fact, actually, I think the conversation there is sort of starting to look at where WA has some real natural entitlements for success. And that actually is an influence on successful capital raising. And it sort of comes back to my point that people only invest in what they understand, or they don't invest in what they don't understand. So dominantly, I think we do have some really good natural entitlements in our mining, and particularly the mining supply chain. We have some great natural entitlements in our energy and energy supply chain. And agriculture is really very good. And for that matter, actually, I think we're really developing a strong entitlement in medical devices as well, digital health. And why is that? Is because actually, if you think about in the mining side of things, we actually operate in a backyard where we've got the biggest and best miners in the world.
Yeah.
Right. And we've got a lot of really good, service providers or providers in the supply chain. So I think it makes it easy for the investor to actually understand the environment, to understand the risk, and so on. Where we're getting better at is in sort of like digital health. I think there's in health medical, we're a fantastic place for health here. Particularly in the COVID world, we're a very healthy population. Our borders are keeping people away from affecting that. And so we provide a lot of services, clinical trials. People like Linear has done fantastic in terms of providing that globally. But where we actually have some really hidden pearls, I think, is in sort of cross-sector technologies. So WA is brilliant at remote operations.
Yes, it is.
And so remote operations actually is not just good in mining and in energy, but it's actually really good in space. Actually, remote operations is really good in health.
Yep.
So we can apply some of those learnings from the cross-sector into those different ones. If you actually think about health, we've actually got one of the largest footprints in the world in terms of our health system, in terms of WA from Perth to Kununurra, right? If we can actually diagnose and monitor people's health from the other side of Kununurra, why can't we do that in another continent? We have one of the best cyber research institutes in the world. And so you've got companies like Sapient Cyber that is able to apply not just information technology but operational type technology. Where else in the world are you going to get a better playpen than the northwest of WA? So for me, there's that natural area of entitlements. But if we start looking at cross-sector contribution that different players can be, there's a lot of great opportunities for us here.
Previously, you mentioned Silicon Valley. Do you find that you run into a lot of people that try to compare us to Silicon Valley?
Expectations.
Yeah. Do you have to manage expectations that, you know, it's a totally different ballpark?
Yeah, absolutely. And I think that comes down in terms of just understanding the ecosystem that you actually, you're in.
Mm.
And that does have an impact on the point we talked about in terms of valuations and so on. Some people do actually sit down and say, when you look at WA, our mining technology is we're the Silicon Valley of the world. And in fact, actually, we've got some sensational companies that have actually, they service the big miners. And so, but why is that? It's because we have a environment, a natural entitlement, an ecosystem that you're not going to find other large mining playpens than in WA. Queensland is good. What makes Silicon Valley really quite an exciting place is that there's so many entrepreneurs over there, so many funds, so many technology environments that it's very easy for you to find, entrepreneurs, mentors, angels, VCs that pretty well are involved in a lot of different sectors. But importantly, they have a Rolodex par excellence that they can ring up and get you connected into any market in the US very, very quickly. Right. We don't necessarily have that in other areas here in WA. Yeah. And so if I was in Silicon Valley, I can actually get a much better valuation because there's a lot of risk that's not experienced because they've got market connections. Risks are taken out.
So, and they have a higher appetite for risk as well, don't they?
Well, they do have actually the answer I think in that is no.
Interesting.
It's because it's managed risk. Because they actually can connect you to, if you're in connect to a wholesaler or food, what company I was thinking about was in the food area in distribution. Well, they can actually bring up somebody that's got a 2,000 store chain and talk to the CEO today.
So they can actually...
You can't do that in Australia. You can't do that in WA, right?
So they can actually identify your risk, probably that you haven't even identified, and solve it for you.
Absolutely.
That's it. I've never heard it put that way. That's interesting.
And so therefore, they've still got the same risk management that we have over here. It's just that they're able to manage some of that risk a little bit differently. So you don't actually see a lot of mining technology or the engineering or some of those other things that we have in WA. That doesn't happen in Silicon Valley because they don't have deep entitlements in those areas. We do.
Yes.
Right. You go to Israel. Israel's got some deep entitlements in some areas, and they've got Rolodexes around the world. You go to Silicon Fen around Cambridge, very much in life science and information technology. These guys have got fantastic connections into sizable ecosystems. And so we're starting to get that built here in WA, which is fantastic. But they're the things that we've actually got to build to create an ecosystem of vibrancy for our startups. And someone made the question earlier about Canva. And the reason Canva went east is we're actually not a marketing tech. We're not big marketing tech here. Eastern States is. Sydney, San Francisco is. Right. So some of the businesses that you see that move out of WA are because we don't actually have natural entitlements here. Yeah.
It's interesting. Do you think they could have succeeded here, given the right strategy or?
I think, there is potential. I mean, WA is very, we're a smart environment. We've got a lot of talented people. But what they would have had to do was actually connect with, the investors that they've done over the Eastern States and Silicon Valley that really understood the size of the market. The difficulty here is that we really didn't have people, and probably still don't have people other than those that watched it, wishing they'd, the fear of missing out, that really understood, what the potential that Canva could have achieved. And so I think there were a couple of people that I have a lot of admiration for that actually had the insights to take into an environment where they understood what the value proposition was. And that's what took them off.
There must be a lot of startups that fail before they get that opportunity.
And I think and it's like any part of business. It's whether or not you're actually at a research level, you're at a startup level or a mid-tier level, less for the big guys because they're quite established. But what they've really got to do is actually find that investor venture fit. And if you can't find that, you sometimes die on the vine.
Of course.
And so this is all about us becoming investment ready. Let's actually work out what's the best fit for us, and let's go knock on the door that might have an interest in us. How many times do you guys go and sell your products? And if you're selling it into a market that doesn't have a need for what you're selling, you're not going to make a sale, are you? So what we've got to do is make investment ready is actually work out who's got the best appetite and go talk to them. And then we can hopefully survive that valley of death.
Yeah, so the news has just come out that Blackbird VC has actually invested in its first WA company, Riebe. What do you think about Eastern States VC kind of entering into the WA market, or is it more like the WA market, presenting itself over there? And will COVID-19 actually increase the amount of opportunity due to people actually being able to do this through Zoom calls?
Yeah, there's probably a couple of different prisms to look at that. I think, that Riebe Blackbird, I think actually is a great example where actually we can attract Eastern States investors to participate. Riebe actually is a great technology. It's actually got some stuff out in the marketplace. It's got traction. It's proved it's taken risk out.
Yes.
And so it's ready for its next level of sort of growth. They actually did a really good job in creating profile. And so I think that's actually the point I want to stress here is that in WA, what we've got to do is increase the profile of our opportunities. And so, in a way, the guys from Blackbird have been really good in terms of supporting WA and, presenting what they're looking for and, telling WA Ventures what they like to invest in.
Yeah.
So now I know what the buyer wants to buy. But Riebe did a really good job in terms of lifting its profile, and so I think we need to spend more time. And I think it's the ecosystem. If we can actually start to get success stories, in some of the mining technology companies, that have actually gone through from developing and then being sold out. My plan's been sold into Hexagon. Mining's bought them. Let's actually start looking at some of our high profile and medical areas. What OncoRes has done is absolutely brilliant. The fact that, Sapient Cyber has actually, had an investment at a Woodside into it, and it's servicing in that sort of area, and it's, unique.
Sapient Cyber is a big one that a lot of people aren't aware of.
No, and I think that's my point. I think where I think the Blackbird Riebe bit is a good example that if we get good profile and we let people in other places actually be aware of what we've got, and the fact that we've got these guys are operating in natural entitlements.
Yes.
They go, I should go and hunt in that ground. And so, I think it's great if we can actually attract both national and international funding here. It is required that we've actually got to lift the profiles of our ventures and who are our success stories, who are our heroes, in terms of that. I'm probably not of the mind that we're going to get a number of venture funds established here. I think Your Capital, albeit fully invested at the moment, they were just fantastic. I mean, you had quality venture managers, James, Liddy, Matt. I mean, these guys really knew what they were doing, and they were a great fund. Not the vulture capitals of the world.
Yeah.
They were good venture capitalists. But, how they were funded, I don't think those programs are going to come around any time soon. So I'm not sure that we'll end up with some venture funds here. But that's not to say that we can't do things to actually lift the awareness of what WA's got into other areas.
And what about into the Asian market? Everyone always says, "Oh, this is perfect for Asian money."
And Perth is so close to Asia.
Yeah, we hear that a lot, but no one knows how you actually even start.
Yeah, that's
doing
another
that.
really interesting one. That one. Look, there's over 2.5 billion people within 12 hours flying time on this flight.
Yeah.
It's over, probably a third of the world's population sits out of us. I think part of the difficulty is that we've got to create an investment proposition that allows people in Singapore or in Malaysia to actually realise that they can actually invest in us and that we're a good buy. But actually managing or investing in deals that are on the other side of a continent actually institutes risk. So not only do we need to actually have the entrepreneur structuring their venture to be investment ready for that type of risk going into those markets, we've actually got to get off and we've got to travel to those environments and actually let them know about us. And so we need to actually promote that. I see a lot in one of my businesses. We do a lot of work, with China, right? But and it's a bit hard now in the COVID world because it's a bit hard to go and travel into those places.
Yeah.
But there's other ways that we can create relationships, and we've got to work out how do we create relationships and how we create awarenesses and how do we structure the value proposition that Blackbird in Sydney was prepared to invest in something in Perth. How do we create awarenesses that someone sitting in Singapore might want to invest in Perth? How do we structure the deal so that they manage the risk? How do they get the return, and so on? You had another question about COVID. Did you want to?
Yeah. Well, do you think COVID will actually help people find outside investment, or because of restricted travel, actually limit it? I think we found people are more likely to talk to you outside of Western Australia now, over the likes of Zoom.
Zoom calls are more accepted.
Yeah,
than
but
it used to be.
Is that enough to attract funding or create decent networks? We're not sure.
So my answer to that is that I think you're right. COVID has actually created an acceptance of communicating and building relationships digitally. Right, and I think that's really important that we do that. You still need to be investment ready for that.
Yes,
right. So
probably more investment ready.
Well, in fact, actually, sometimes it may provide you an opportunity to actually create a value proposition that you've got more people that you can talk to. That hopefully there's going to be an appetite match or an investor venture fit, right? But you've got to build relationships. And you've got to get them to be aware of you. And again, in fact, actually, maybe to take your point, you need to be more investment ready. But actually, what I would say is that you need to be a much more compelling proposition. So, while you might be, there's a market size here in WA, and there's sort of say a dozen ventures vying for the one investor. You go to the Eastern States, there's 100 ventures trying to vie for that one investor. And so you've got to stand out from the crowd.
No, you're on the global marketplace.
I didn't get that.
Oh, oh, sorry.
Sorry about that.
Sorry. Yes, now you're on the global marketplace competing.
Absolutely. So you've actually got to prepare yourself to compete in a much larger marketplace. So you've got to be a lot sharper. You've got to be a lot easier to deal with. You've got to have a much more compelling investment proposition to actually stand out amongst the pack for someone to participate with you. So go back to Riebe. How many people are playing in that sort of space and doing what they're doing? And in terms of that traction, they stood out from the pack. And so it probably make it an interesting Blackbird to spend time thinking about.
Do you find that West Australians make cultural mistakes when they step outside the WA, or maybe they step outside the mining industry?
I'm not sure if it's actually cultural mistakes. I think it's probably understanding that it's quite a large world out there. I often sort of find people that really they sort of understand how WA works, right? And so in WA, yes, they just understand, not dominantly, but they invest through listed stocks, or they invest in property. Not that many in private investments. In the eastern states, there's less, exploration investments, if you know what I mean, because they're, in Sydney and Melbourne, they're not mining towns. Probably as mining towns. So but it's a much larger environment. So we're going from a 2 million city to a 7 million city. If I actually go into China, there's 25 million people in Shanghai, and they're probably sub-markets all on their own, right? So I think it's probably just getting that sort of realisation of the different size of the markets, and there's a different perception, there's a different level of competition, and so it's understanding how you need to compete in that environment.
I want to touch on VC versus VC. You mentioned vulture capital and venture capital. So if I was a startup looking for VC, how do I know which VC is which?
Yeah, I think there's a couple of interesting dimensions on that one as well. I think there's a general sort of perception that venture capital is a little bit like vulture capital because of what they want and their agreements and so on. And so I think there's some good venture capitalists or venture capital funds that have been regarded as vulture. And so it's actually understanding how the money is provided and how risk is managed in that sort of funding arrangement. So if we talk about angel investors, they invest a lot smaller and a lot more direct, but it's actually their money that they're investing. If I get into an institutional fund like a venture fund or a venture capital fund or a private equity fund, actually the fund manager is now using somebody else's money.
Right.
And so as a fund manager, their investor is actually putting a contract on them to perform. And so what they tend to do is to actually put that risk of that performance onto you, the entrepreneur, so they're protecting themselves. And so their agreements tend to be a little bit more, a lot more structured. Some people say a lot more draconian. But when you actually understand that, that's how they actually buy.
Yeah.
And so it's not necessarily that they're bad, it's just that they've got to have much stronger contracts to manage the risk that's been placed on them. And, it's very competitive. And they've got a limited time by which they have to perform. So it becomes a lot more structured and disciplined. People don't like some of those very strong contracts, so therefore they call them vulture capitalists. Mind you, there are actually some that are putting uncharacteristically difficult contracts or investment agreements on you, and they really are vultures. So I think it comes down to how do you manage that? I think it actually comes down to actually understanding who is the customer that you're selling to, the funder that you're selling to or that you're engaging with, understanding how they manage their risk, how they actually add value, and if it, if the agreements and you look at all that, it's all sort of reasonable. Well, it's like I said, it's always better to share to multiply. But if the other ones, it's too hard and too difficult compared to others, they're the ones you don't engage with.
And now, a quick word from our sponsors.
We believe that you can create art and beauty with technology. We think big. We move quietly. We are Ninja Software.
Jumping back to the tired topic of the pandemic, we spoke about eastern states making it easier to connect with them. But in WA, have you seen any effect of the pandemic on startups here in terms of taking risks, in terms of new startups popping up? Just the ecosystem. Has it been affected much?
I think again, let's talk two sides of the coin. So let's just talk about the entrepreneurial side of the coin first, and then we'll talk about the investor side of the coin. I think from the entrepreneurial side of the coin, things have become a lot more problematic. For those ventures that, for instance, if you're in an early stage, you've got to get there and validate. When there were restrictions and it was difficult to get to customers to actually validate and so on. So that actually took a lot of things out.
Right.
clearly priorities have changed for a lot of businesses. They don't have the capital. Some of the larger businesses, what they saw as strategic has now shifted because COVID's done it to that. So therefore, what you thought was actually an important opportunity or critical opportunity is lesser now.
Yeah.
And so you've seen a lot of pivoting, in terms of people having to pivot. The same thing, though, is that there's actually a whole new set of problems out there. And so those that are actually doing the, understanding those deep related problems and actually taking that approach to understand whether that's worthy of pursuit. So yes, there's new ventures or new pivots or new direct startups that are servicing those, and quite rightly should, because there's new deep problems to solve, and they've come up with an idea to do that. There are some that actually, are going down a particular path and now are under stress going down because they can't do a validation aspect. They can't connect with their customers. For some, though, because we were just talking earlier that virtual, Zoom connections and that, if I can get the right relationship or introduced and referred to, actually now I can actually talk to people in the eastern states and I don't have to travel. So that's the sort of impact on the entrepreneurial side of it. So for some it's stress, for others it's opportunity. On the investor side of the coin, investors always are quite judicious in their investment, decisions in any event. And so they're just a lot more judicious and a lot more focused. I talked about investments at different stages of getting that appetite. So say at the angel level, which is very much at the development stage of maturity, they really want to have some sort of value proposition that's validated that the customers will buy. Well, if I've got an impact now in terms of not being able to do the validation, they're not going to make a decision on that until that that's validated. Priorities are changing. And so therefore, they're more judicious in thinking through those sorts of issues. And now you're starting to see investment timelines go out a little bit more. But at the same time, if there's a deep-seated problem that requires a good solution and you've got a great solution for that, there's opportunity. I think I heard one corporate saying, why waste a good crisis?
Do you think the amount of capital has decreased due to COVID-19? Or do you see that coming back or not affected at all?
I guess it goes back to my early question. Is I think the capital is out there.
It's shifted priorities.
It's shifted a bit, and it's actually probably slowed down a little bit as people are just trying to work out what the new normal is, such that they can actually feel comfortable that and even if they understand what risks you've taken out, what has COVID done? What's the new normal going to be? And how do I manage the risk that you've got to take out? So I've got to get those clear in my head before I'll probably put my money in.
Yes.
Has it decreased? Yes, there's probably an impact on that because businesses are holding their money back until they actually understand what survival means in terms of going through. So yes, there's probably a little bit of that.
What about with the angel investors? Are they, in general, is the mood a positive one, or people kind of still waiting to see what will happen?
I think there is, back to my point about people are trying to understand what the new normal is, and it's in that investment decision. But I can say from the Perth Angels, they're still running pitch nights. So since COVID hit, I think there's another one next month. There's going to be another one close to the end of the year. So there's 4 pitch nights in COVID world. So there's still interest to look at ventures. The venture itself now got to be a compelling venture, and it's actually got to address probably some more of those sort of new normal type questions. And if that does happen, people will get investment. Now's a great time because actually, if it's early stage, you've got to develop it. Nice place to actually close down and develop.
On that actually, so now that everything's been pushed around because of this pandemic, there's the 2 paths businesses can take, which is either grow or contract. So as a business owner who has to pivot to react to external forces? What is some advice you have for these business owners?
And actually a really good question. And I'm seeing that whether or not you're at that research level of innovation, you're at that startup level of innovation, you're at that mid-tier of innovation, or you're the enterprise level, corporate level. And so there's a lot of similarities with those sort of four strata levels. A lot of same, but there's a lot of different kind of thing. I think what's same for all of them is that what they've got to do is be a lot more agile. Agile is not a dirty word. It's what you've actually got to be. And being agile is about getting more and more insights. So there's got to be a lot more strategic thinking within businesses rather than strategic planning, if I put it that way. And strategic thinking is all about actually understanding really what those sort of global trends are, right? And how those trends have actually starting to shift because of COVID. And we're all starting to work out what the new normal is. It's still going to take some time. Actually, there's a whole shift in terms of people are prepared to do things telehealth or, in some of those sorts of areas. And people are looking to actually do more business. So maybe there's a different perspective on partnerships, right? Actually, we can't physically travel too much, so I'm actually running a program in terms of export management. I can't actually, some of the borders have shut down. There may be not enough traveling inside. So I've got to think about how do I get my product from here to there? And even if I do get it there, can I actually get it through that country? Because the borders are shut down in those areas. So all of a sudden, new business models are really interesting. So instead of having a physical transport, shipping a product, and me setting a lot of that stuff up, maybe these e-commerce platforms, are now, a good way of going. So it's all about getting more and more insights into options and getting more agile and being able to think those things through and in a way pivoting your business in a valuable way. So whether or not you're having to pivot your research project, your startup, your mid-tier, and even Qantas, is having to think about pivoting because its profits down 91%.
91%. That just hit me.
Yeah.
Just a totally off-topic, silly question now. Do you think the likes of Shark Tank, what's the British one? Dragon's Den, thank you, which is far superior, personally, I believe.
Agreed.
Do you think the likes of those shows have helped people, like educated people a little bit, or do you think they give people the wrong idea of early stage investment?
I actually do think they do play a valuable part in our innovation and entrepreneurial mindset in Australia. They're obviously a lot more theatric, and so a lot of people sit down and say, is the Perth Angel just like Shark Tank? And my response is no. There's a lot more theatrics in that. But I also do say that you should always you should always dance with the angels before you swim with the sharks.
Yeah. I like that. That's good.
So I think what they're doing is giving people exposure to, new entrepreneurial ideas, great ideas, and actually people can get money for it and people can make businesses out of it. So I think that's why Shark Tank and Dragon's Den actually play a really valuable service. But it's a lot more theatrical to what the real world is. We don't have 5 people sitting in a chair at a Perth Angels pitch night. We got 50 people sitting in a chair, and it's a different sort of demographic in terms of that. And I guess it goes back to one of my early points. I think what can make our ecosystem here in WA much more richer is actually creating profiles of people who have been able to do it. So, you take someone like Mark Berryman from Rhino Hide, he's sort of one of the earlier investments through the Perth Angels, but he also got money out of the Shark Tank. And the people that he got from the Sharks that are on his in his business are fantastic people. And so there's a whole real win-win there. And so we need to get that profile out that people are, damn good businesses making damn good growth.
What's it like for an entrepreneur getting up in front of the angel investors? Do they get hard questions or?
Oh yeah. actually haven't been on both sides of the room,
Yeah.
both as an angel investor, but also as someone pitching for angel investment. The nerves never go away. Do you think you've actually got all the answers? No, you don't. Will they ask hard questions? Yes, they will. But it's all about actually creating a relationship in terms of that. So, use your nerves, right? Actually get up there and realize that it's that energy and get that adrenaline flowing. But don't get up there and be cocky. It's great to be confident, but it's all about us trying to create value. So if an angel investor wants to invest with you, they're actually wanting to partner with you. So it's not us and them, it's we.
Yeah, angel investor is closer to a co-founder, isn't it? Someone who comes in.
Yes and no. I think that, one of the common things with sort of angel investing and venture funders, and again, I'll use you. So you look at. I think both of them actually have an alignment of interest and rewards. They're going to do whatever they can to make you successful, and so they do want to. They don't want a job. They want an investment that's going to get returned, but they're going to do whatever they can to help. And so when you look at the investments where I've seen my angel colleagues getting in there, they're not rolling up their sleeves to do work. They're rolling their sleeves up to give you insights so that you can strategically think and win. And then you look at someone like you with Matt, Liddy and James. I mean, they got into those investments and they gave some really sensational input. Same, but a little bit different.
Yeah. And the networks, obviously. So there's a lot more value than just money from.
Oh, no, I think, that old adage, used to hear about sort of what does smart money mean. And I think it's actually, it's helping you build capability. It's helping you be successful. There's got to be an alignment of interest and reward.
Okay. So you mentioned that you've been on either side of the table, entrepreneur and investor. So in this long journey, have there been any really standout resources that helped you along the way?
I think the one that really has helped is actually building capability around me, and getting getting my own mentors, getting my own advisory board, and so I certainly think I've got a lot of good experiences, but I don't have all the answers. No matter what I do, and so what's really helped me is actually going out and finding other people. As I say, I don't think I have all the answers, but I know someone else will. And so I want to go out and find those people. I actually want to be the dumbest person in the room. And I think if we can build capability, that's the biggest thing that does actually help me.
So you'd have to basically know the right people, or at least know someone who knows someone that can help you.
Yeah, absolutely. And I think, I've been really lucky and been involved in so many different networks. I'm pretty sure I can find someone who's got the right skills or experience and sort of join those sort of dots for others or for myself for that matter. But I also recognise that if I'm going to actually get someone to come on the journey with me, I've actually got to get an alignment of interest and reward for them. Right. There's some fantastic people out there that are give and give and give. But at the end of the day, they've got very, very valuable input. So how do I actually get them aligned with what I'm doing so they can get a win out of it as well, and a reward, which I think is really important.
We were talking before the interview, and you were telling us how, due to COVID-19, people in Western Australia should support the local, local community, local businesses, especially local tourism. So, could you tell us how you did that?
Yeah, so the rationale for me was that we never knew when the borders were going to open up, but there was going to be restrictions obviously lifted at some point in time, and obviously I'm passionate about the West Australian economy.
Yes.
And so those parts that have been really slam dunked has been sort of retail, hospitality, tourism, and a lot of that's dependent upon the consumer dollar. We're not getting a lot of people coming in, not from international eastern states. So how do we get actually WA going and looking and playing in its own backyard? So I sort of thought a really good idea was that every time I got on a Zoom meeting, I actually had a different tourist spot in WA, some of my favourite ones, that that people could start to think about where they might go once COVID restrictions got lifted.
Yeah.
I had ones like Horizontal Falls out of Broome, which I've been, which is just a complete global phenomenon. People should go and see. Yelling Up, why wouldn't you go down there? Margaret River, why wouldn't you go there?
Yep.
Albany, why would you go there? So it's just the Abrolhos Islands, why would you not go there? And so it's just bring it top of mind with people, and hopefully people, when COVID lifts, they go and party in our own backyard.
I think a confession that a lot of Western Australians, especially people from Perth, will make is that they've not actually visited their own state.
Yeah, and we do have some really, fantastic, places. I'll put a plug in for my fishing trip in October. Hit out of Exmouth.
Nice.
Yeah, on Blue Water Horizon. That's my investment there for rabbit.
And just to wrap it up, we always ask a whimsical question. So, we had a pretty serious discussion, but now I've got a not so serious question for you. I don't know how familiar you are with wrestling or MMA or boxing, but the fighters always have their intro music, right? So, when they walk into the room when doing their strut and the music comes on, what is your intro song?
Oh gosh, that's a really good one. Actually, I can't remember the track, but it was a really good one about. It was about money. Actually, I can't remember it.
Thank you so much for joining us, Greg.
Oh, no, pleasure. Really enjoyed it. Thanks for the chat.
A really interesting discussion. How can people? I'm sure there's been a lot of people who have watched this and gone, Greg knows things I need to know. What should they do? Where's the first port of call they should go? What should they do before coming to you?
I think probably getting really clear about what's their outcome they really want to achieve. Thinking about what's the outcome they want to achieve and where do they see the gaps in their capability at the minute. If they can give me an idea about that and what they're trying to achieve, maybe we can actually have a chat about how we can help them join the dots and build the capability that they need to be a success.
All right. Thanks for that, Greg. Thank you for watching. If there was anything in this interview of interest to you, hit us up, techsociety.fm.
Big thank you to Troy from Film My Video for producing and editing this content. Without Troy from FMV, this video would not be possible. Their work is amazing. You must check them out.